At 6:15 a.m., your Sunday begins with the vibration of a second-hand phone on a laminate nightstand. You lie in a rented room in South Chicago where the radiator clanks every 20 minutes, staring at the ceiling. Your shift at the distribution warehouse starts at 7:30 a.m., and your hourly rate is $16.50. The system knows one thing about you. At this first tier, you possess a net worth of $1,420. Almost all of it sits in a checking account that yields 0.01% interest annually. There is no relationship here. There is a transaction. Your Sunday is not a day of rest, but a day of intense time liquidation. If you do not work the overtime shift, you cannot pay the electricity bill, which is currently $142.15. The first rule, at the bottom of the financial ladder: time is not a resource to be managed, but a commodity to be liquidated for survival. After your 8-hour shift ends, you spend $4.25 on a bus ride back to your apartment. You spend the remaining hours of your evening prepping meals of rice and chicken breasts that cost $18.40 in total. This ensures you do not spend $12 on lunch during the upcoming week. The math never stops running in your head. You calculate the cost of laundry at the local laundromat, which requires $6.50 in quarters. You delay washing your bedding for another week to save that cash for a tube of toothpaste and soap. Every minute of your evening is consumed by physical tasks designed to prevent cash outflow. Your energy is spent entirely on maintaining a break-even existence. You calculate that at your current saving rate of $42 a month, it will take you 36 months to build a basic emergency fund of $1,512. This realization brings a heavy mental fatigue that makes it difficult to sleep. The constant calculations of small numbers deplete your cognitive bandwidth, leaving you with little energy to plan a career transition. You are trapped in the immediate present, unable to buy your way into the future. The large retail bank that holds your funds charges a $12 monthly fee if your balance falls below $1,500. An overdraft fee of $35 waits if your phone bill of $85 auto-drafts before your paycheck clears. At this level, the financial system does not reward your effort, it penalizes your thin margins. You are a unit of cheap liquidity for the bank's lending operations. Something changes. Not dramatically. At the second tier, you have reached a net worth of $45,000. Most of this is held in a standard savings account earning 0.45% interest, alongside $8,200 in a retirement index fund. You no longer work hourly shifts on Sundays. Yet, your day is still dominated by labor. This is the competence plateau. You wake up at 8:30 a.m. in a mortgaged 2-bedroom townhouse in suburban Denver. You spend the first 3 hours of your Sunday cleaning the bathrooms, vacuuming the carpets, and mowing the lawn. To hire a cleaning service would cost $150, which feels like a luxury you cannot justify. Afterward, you drive your 5-year-old sedan to the grocery store to buy ingredients for the week, spending $165.40. You spend another 2 hours washing your car in the driveway to save $25 on a professional car wash. The second rule: below $100,000, you are not saving time, you are trading hours to defend a fragile balance sheet. You spend Sunday evening looking at your spreadsheet, tracking your $45,000 net worth against the rising cost of living in Denver. You note that the median home price in your area has risen by 8.4% in the last 12 months, outstripping your annual salary increase of 3.2%. You realize that despite your hard work and budget discipline, you are barely keeping pace with inflation. The financial treadmill is moving faster than you can run. By 7 p.m., your physical energy is depleted. You sit on your couch, watching a streaming service that costs $15.99 a month. You feel a quiet anxiety about the morning commute, knowing you must log into your corporate office job at 9 a.m. sharp. Your Sunday was not spent on leisure, but on unpaid maintenance. You are trapped in a cycle of self-reliance. You cannot afford to outsource these tasks because your post-tax monthly income is $4,200 and your fixed expenses consume 75% of it. To pay someone else to clean, cook, or maintain your home would erase your monthly savings of $600. You must trade your weekend to preserve your capital. Your townhouse requires a monthly mortgage payment of $1,850, which keeps you tethered to your desk. The house is an asset on paper, but it functions as a liability on your weekend calendar. You spend Sunday defending its value with your own sweat equity. Your weekend is an unpaid shift dedicated to asset preservation. Something changes. Not dramatically. At the third tier, your net worth stands at $180,000. You are an assistant marketing director in Atlanta, earning a salary of $115,000 a year. You have $60,000 in home equity and $120,000 in your retirement portfolio. You have finally begun to outsource your physical chores. Your Sunday morning begins at 7:30 a.m. with a $6.50 cup of artisanal coffee. At 9 a.m., a cleaning crew arrives to clean your home, costing you $180. Meanwhile, a delivery driver drops off your weekly groceries, a service that costs $220 plus a $30 tip. You have successfully reclaimed 5 hours of physical labor. Yet, your reclaimed time is immediately colonized. You spend your afternoon reviewing design documents and answering corporate emails to prepare for Monday's 10 a.m. executive meeting. You tell yourself this is necessary to secure a 15% annual bonus. The third rule: when you outsource your chores, you do not buy freedom, you buy the obligation to perform higher value work. Your condo is a modern space, purchased for $580,000 with a 30-year fixed mortgage at 6.25% interest. You check your personal finance dashboard on Sunday afternoon, noting that your net worth increased by $1,850 this month due to automated retirement contributions. While this number is growing, you recognize that you are entirely dependent on your salary to maintain this lifestyle. If you were to lose your job, your liquid savings would cover only 90 days of expenses. By Sunday evening, you are mentally exhausted. You eat a dinner from a meal delivery service that costs $45. You sleep with your work phone next to your bed, ready to respond to notifications. This is what corporate alignment actually feels like. You spent $430 on Sunday to buy back your time. But because your career demands your constant cognitive focus, you spent that bought time working on company problems. The system has simply optimized your productivity for your employer. Your Sunday is a preparation period for the corporate machine. The shift: at the fourth tier, you possess a net worth of $950,000. You are a senior technical consultant in Dallas, Texas, earning $240,000 a year. Your stock portfolio is valued at $500,000, and you have $350,000 in home equity. You are now classified as an accredited investor, opening new doors in the financial system. You wake up at 7 a.m. and spend your Sunday morning reviewing private placement memoranda. You examine a syndication deal for a commercial office park that requires a minimum investment of $100,000. This is the first time you are looking at investments outside the public stock exchange. You must read through an 80-page prospectus to evaluate the risk. You spend 4 hours analyzing cash-on-cash return projections and debt service coverage ratios. The opportunity excites you, but you realize that committing $100,000 would deplete your entire liquid emergency fund. The fourth rule: at the accredited threshold, you are permitted to take risk, but you do not yet possess the capital to survive its failure. You meet your accountant on Monday, but on Sunday, you prepare the tax documents for your consulting business. You spend 2 hours organizing receipts for client dinners, travel, and home office deductions to reduce your effective tax rate from 32% to 24%. You realize that tax compliance is another form of labor that you must manage yourself to protect your wealth. The system rewards this diligence, but it demands your weekend hours to execute it. Your Sunday is consumed by financial education and calculated anxiety. You are no longer doing manual labor, nor are you doing basic corporate tasks on Sunday. Instead, you are trying to cross the chasm from a highly paid wage earner to a true owner of capital. The mental exertion is intense because one bad investment could set your retirement timeline back by 5 years. The system invites you to participate in private markets, but it does not protect you. If the commercial property project defaults, the bank will foreclose, and your $100,000 will be erased. You spend Sunday afternoon questioning if you should remain in the safety of index funds that return a predictable 8% annually. Your weekend is defined by the weight of active capital management. The machine doesn't ask if you're ready. At the fifth tier, your net worth reaches $4,800,000. You own a digital marketing agency that generates $1,200,000 in annual profit. You also hold $2,100,000 in a diversified real estate portfolio and $1,500,000 in public equities. Sunday is no longer defined by the corporate calendar. You wake up at 7 a.m. in a modern home in Austin, Texas. You spend the morning at a private golf club where the annual membership fee is $25,000. Your playing partners are other business owners and real estate developers. While walking the course, you discuss a potential joint venture to purchase a $3,500,000 commercial property. Your afternoon is spent with a private longevity coach who costs $350 an hour. You undergo a personalized recovery session involving a cold plunge and red light therapy. You are investing in your physical body as an asset that supports your business. The fifth rule: capital does not sleep on weekends, which means the asset owner must learn to measure productivity in deals, not hours. While you are playing golf in Austin, the employees at your marketing agency are enjoying their Sunday, unaware of your capital maneuvers. Your director of operations, who earns $95,000 a year, is managing the client projects so that you do not have to. You pay this director to shoulder the daily operational stress, allowing you to focus on strategic growth. This leverage is what enables you to maintain a net worth of $4,800,000. In the evening, you host a $1,200 dinner for 8 local capital allocators to discuss deal structures. You deduct the entire cost as a business expense. This is legal. This is normal. You no longer trade time for money. Instead, your Sunday is spent positioning your capital to capture more assets. The clean toilets, the groceries, and the administrative tasks are handled by a personal assistant whom you pay $28.50 an hour. Your time is spent entirely on high-leverage decisions and health optimization. Something changes. Not dramatically. At the 6th tier, your net worth reaches $22 million. Your wealth is managed by a multifamily office that charges a 0.85% annual asset management fee. They oversee your trusts, tax strategy, and insurance structures. Your Sunday is completely insulated from daily operational concerns. You wake up at 8 a.m. in a penthouse overlooking the marina in San Francisco. You spend your Sunday morning at a private vineyard in Napa Valley, where a tasting event costs $250 per person. Your companions are venture capital partners and early-stage startup founders. You are not discussing jobs or projects, but macro trends in artificial intelligence and energy infrastructure. You agree to invest $500,000 as a limited partner in a new biotech fund. This commitment is made casually over a glass of wine, but it will be executed by your family office lawyers on Monday. The 6th rule: at the tens of millions level, you no longer invest in public markets, you buy direct ownership in the operating companies that shape them. You also spend Sunday evening discussing trust funds and estate planning with your spouse. Your family office has proposed a grantor retained annuity trust to transfer $5 million of privately held stock to your children tax-free. You spend an hour reviewing the legal structure, which will protect your assets from future estate taxes. This long-term planning ensures that your wealth will persist for generations, insulating your descendants from the need to trade their time for survival. Your time is structured around relationship maintenance and strategic alignment. You do not worry about the efficiency of your house cleaning or your flights. Your family office has hired a concierge service that handles every detail of your life, from booking yachts to managing property maintenance. Your primary responsibility is to remain in the rooms where high-value information is exchanged. You spend $1,800 on a helicopter transfer back to the city to avoid traffic. Your Sunday is spent building social capital that will yield business opportunities months down the line. You are a capital allocator at this level. Specifically, you are trading luxury experiences for proprietary deal flow. The rules become flexible. At the 7th tier, your net worth reaches $85 million. Your wealth is structured across multiple family trusts, private equity holdings, and a real estate portfolio valued at $35 million. You do not have an employer, a boss, or a traditional office. You own the capital that commands the schedules of thousands of employees. Your Sunday begins at 9 a.m. on your private estate in Palm Beach, Florida. A private chef prepares a breakfast using ingredients imported from Italy, costing $450. At 11 a.m., your wealth manager calls to discuss an opportunity to acquire a distressed luxury resort in Spain for $12,500,000. The transaction will close on Tuesday morning. After lunch, you board a chartered private jet costing $45,000 to fly to New York City. You spend the flight reviewing tax restructuring proposals from your legal team, designed to save you $1,200,000 in capital gains taxes. You do not wait in security lines or check baggage. The 7th rule: true wealth is the ability to decouple your calendar from the social consensus of when to work and when to rest. You also review a proposal for a new philanthropic foundation that you will fund with $10 million of appreciated stock. This foundation will focus on clean water initiatives in South America, which aligns with your personal values and provides a major tax write-off. By donating stock instead of cash, you avoid a 20% capital gains tax while claiming a charitable deduction on your personal tax return. The system allows you to convert tax liabilities into social influence. You spend Sunday evening at a private art gallery opening in Manhattan, where you purchase a contemporary painting for $280,000. This acquisition will be stored in a Freeport warehouse to defer sales tax. Later, you have dinner with a senator to discuss upcoming regulatory changes that could affect your shipping logistics investments. Your Sunday is completely integrated with capital expansion. You do not experience the Sunday scaries. Monday represents no threat because your income is generated by assets, not labor. You can decide to fly to London on a Tuesday or stay in bed on a Thursday. Time is no longer your master, it is a raw material that you shape. Somewhere in Chicago right now, a 22-year-old is waking up at 6:15 a.m. to the vibration of a second-hand phone on a laminate nightstand. They do not know yet what the journey costs. Not in dollars. The machine opens every morning. It takes whoever shows up. The alarm is vibrating at 6:15 a.m. It always starts there. It always will.